How I made $3,200 trading just one setup over and over. The problem with knowing too much. Let me ask you a question. What if the reason you're struggling to make money trading isn't because you don't know enough? What if you actually know too much? You've probably watched hundreds of trading videos. You've learned support and resistance, liquidity, market structure, order blocks, fair value gaps, breakouts, reversals, trend lines, indicators, and countless different strategies. Maybe you've even learned several strategies from several different traders, and yet you're still struggling. One day you're a scalper. The next day you're a swing trader. Monday, you're trading breakouts. Tuesday, you're trading reversals. Wednesday, you're convinced you've discovered the perfect ICT setup. Thursday, you completely abandon it. And Friday, you're wondering why your account isn't growing. Now imagine doing the opposite. Imagine removing almost everything. Imagine opening your charts and knowing exactly what you're waiting for. One setup, one pattern, one execution model. And instead of looking for something new every day, you simply wait, wait, wait. And when your setup appears, you execute. Then you wait again. That's the idea behind this story. How I made $3,200 trading one setup over and over. And no, the lesson isn't that one setup is a magic money-making machine. It isn't. The real lesson is much more important. You don't need more setups. You need more mastery. The decision to simplify. There was a time when opening a chart felt like opening a supermarket. Everything looked like an opportunity. A liquidity sweep, trade. Break of structure, trade. Fair value gap, trade. Order block, trade. Support, trade. Resistance, trade. Strong candle, trade. Weak candle, somehow, also trade. The problem wasn't that these concepts were useless. The problem was that I had no filter. I wasn't trading a strategy. I was trading whatever caught my attention. And that's one of the most dangerous places a trader can be, because the market gives you enough information to justify almost anything. You can find a reason to buy. You can find a reason to sell. You can find a reason to stay out. And if you don't have a clearly defined setup, your emotions become the strategy. Fear decides when you exit. Greed decides when you enter. FOMO decides when you chase. And frustration decides when you revenge trade. That's not trading, that's reacting. So I decided to simplify. Not because I had discovered some secret strategy, but because I realized something. If I couldn't make money consistently with one setup, learning 10 more wasn't going to solve the problem. So I picked one setup, and I made a rule. If it's not my setup, I don't trade it. That sounds simple. But psychologically, it is incredibly difficult, because the market doesn't stop moving just because your setup isn't there. You can watch price move hundreds of points without participating. And your brain starts whispering, you're missing out. Look at that move. You could have made money there. Maybe you should loosen your rules. That's where discipline begins. Defining the one setup. The setup itself doesn't need to be complicated. For this example, imagine a simple price action model. Liquidity sweep market structure, shift retracement entry, predefined risk and target. That's it. Price first reaches an obvious area of liquidity. It sweeps that liquidity. Then the market shows evidence that direction may be changing. We wait for confirmation. Then rather than chasing the move, we wait for price to retrace into our predefined entry area. Our stop goes where the trade idea is invalidated. Our target is determined before entering, and then we let the trade play out. Notice something. There are multiple conditions. That's important. We're not saying price touched an order block, so buy. We're saying condition 1, condition 2, condition 3, condition 4. If they don't line up, no trade. The first trade. Now imagine the first trade. Price approaches an obvious high. Liquidity is sitting above it. Instead of buying into the breakout, we wait. Price pushes above the high. Stops are triggered. Then price quickly rejects. Now we watch. Don't immediately enter. We wait for the market structure shift. Eventually it happens. Price breaks the short-term structure. Now we wait for the retracement. Price comes back into our entry area. This is our setup. Entry, stop, target. And then we do nothing. This is where inexperienced traders often make their biggest mistake. They interfere, they move the stop, they close early, they increase the target because they're feeling greedy. They take partial profits because they're scared. But the strategy was designed before the trade. So the job now isn't to become clever. The job is to execute the plan. The first win doesn't change anything. Maybe the trade wins. Great. But here's the important part. One winning trade proves almost nothing. You can't build confidence from one trade. You build confidence from repetition. So the next day, same setup. Maybe it doesn't appear. No trade. The day after that, nothing. No trade. Then finally the setup appears again. Execute. And this is where something starts changing. You're no longer asking, what should I trade today? You're asking, did my setup appear? That is a completely different mindset. The losing trade, and then comes the losing trade. Because every legitimate strategy has losing trades. You enter. The setup looks perfect, and price hits your stop. Now the old version of you might say, this strategy doesn't work. But the disciplined trader asks a different question. Did I follow my rules? If the answer is yes, then the loss is simply part of the business. And that's one of the biggest mental transformations in trading. A losing trade isn't automatically a bad trade, and a winning trade isn't automatically a good trade. A good trade is one that follows your tested process. A bad trade is one that violates it. The $3,200. Now let's talk about the number. $3,200. It sounds exciting, but the number itself isn't the most important part, because $3,200 could come from one enormous gamble. And that wouldn't necessarily mean anything. What matters is how the money was generated. Imagine a series of trades where risk was controlled. Some trades lost, some trades won. Some setups never appeared, and the strategy was repeated again and again. The goal wasn't, I need to make $3,200. The goal was, I need to execute my setup correctly. And that's the paradox. The less you obsess over the money, the easier it becomes to focus on execution. Why one setup can be so powerful. Think about an athlete. A professional basketball player doesn't practice hundreds of completely unrelated movements every day. They repeat fundamentals again, again, again. A boxer throws the same combinations thousands of times. Why? Because repetition creates recognition. Trading is similar. When you trade one setup repeatedly, you start noticing details that you couldn't see before. You notice the quality of the liquidity. You notice the strength of the displacement. You notice whether the market is trending or ranging. You notice when the setup looks technically correct but contextually weak. You're building a database in your brain, and eventually you stop seeing random candles. You start seeing patterns you've experienced before. The real secret is repetition. This is what most traders don't want to hear. You probably don't need another strategy. You need to see your current strategy hundreds of times. Backtest it. Replay it. Journal it. Trade it on demo. Trade it with controlled risk. Study the winners. Study the losers. Study the trades you skipped. And ask, what did the best trades have in common? Then ask, what did the worst trades have in common? This is how you turn a vague strategy into a real trading model. Stop chasing the perfect setup. There is no perfect setup. Let me repeat that. There is no perfect setup. Every strategy has losing periods. Every strategy experiences market conditions where it performs better and conditions where it performs worse. Your job isn't to find a strategy that never loses. Your job is to find a strategy whose behavior you understand. Because when you understand your setup, a losing streak doesn't automatically destroy your confidence. You know the statistics. You know the expected drawdown. You know what a normal losing sequence looks like. And most importantly, you know when you're actually violating the system. Build a trading journal. If you want to master one setup, start documenting it. Every trade, not just the result. Document the market, the time frame, the session, the setup, the liquidity location, the entry, the stop, the target, the risk to reward, the reason for entry, and most importantly, take a screenshot. Build your own library. After 50 trades, look back. After 100 trades, look back again. You might discover something fascinating. Maybe your setup performs better during certain sessions. Maybe certain market conditions produce better results. Maybe some entries are consistently too aggressive. Maybe you're taking trades that look similar but aren't actually the same setup. This is how you improve. Not by watching another 100 motivational trading videos. By studying your own data. The boring part of trading. Here's something nobody wants to hear about making money trading. It becomes boring. And that's actually a good thing. You wake up, you check the market, nothing. You wait. Still nothing. You check your levels. Nothing. You wait. Eventually your setup appears. You execute. Then you wait again. That's trading. Not constant excitement. Not clicking buttons every 5 minutes. Not trying to predict every candle. Waiting is part of the strategy. Sometimes the best trade you make all day is the trade you don't take. Why traders overtrade? Overtrading usually starts with boredom. Then boredom becomes impatience. Impatience becomes a random entry. The random entry loses. Now frustration appears. Then comes revenge trading. And suddenly one bad decision becomes 5. That's how a trader can destroy an entire week's progress in one afternoon. One setup creates a natural filter. If your setup isn't there, you have nothing to do. And that's powerful. The $3,200 wasn't the goal. This is the biggest lesson. The goal wasn't $3,200. The goal was becoming the kind of trader who could execute one strategy repeatedly without constantly changing direction. Because once you develop that skill, the number becomes secondary. Maybe 1 month is profitable. Maybe another month is flat. Maybe another month is difficult. But you're building something more valuable than one winning streak. You're building consistency of process. And that's what separates disciplined speculation from emotional gambling. If you're struggling right now, if you're currently jumping from strategy to strategy, stop. Take a breath. Choose one model, not the strategy you think will make you rich fastest. Choose the strategy you are willing to study deeply. Define it. Write the rules. Backtest it. Find dozens, preferably hundreds of historical examples. Record the statistics. Understand the losing trades. Then trade it with controlled risk. And don't change the strategy every time you experience a loss. You need enough data to determine whether the problem is the strategy or your execution. The new trader versus the disciplined trader. The new trader asks, how much can I make today? The disciplined trader asks, did my setup appear? The new trader asks, how can I recover this loss? The disciplined trader asks, did I follow my risk rules? The new trader asks, what's the next strategy? The disciplined trader asks, how can I execute my current strategy better? The new trader wants more information. The disciplined trader wants better execution. That's the difference. Your 30-day challenge. Here's your challenge. For the next 30 trading days, choose one setup. Write down exactly what qualifies. Write down exactly what disqualifies it. Define your entry. Define your stop. Define your target. Define your risk. Then take screenshots of every occurrence, even the trades you don't take. At the end of those 30 days, don't ask, how much money did I make? Ask, how many times did I follow my rules? Because that's the number you can control. The final lesson. You don't need to predict every move. You don't need to catch every reversal. You don't need to trade every session. You don't need 10 indicators. You don't need 20 strategies. And you certainly don't need to be right every time. You need an edge. You need risk management. You need patience. And you need enough repetition to become extremely familiar with your setup. The market will always offer another opportunity. You don't have to catch this one. You don't have to chase that one. You don't have to trade because someone on social media just posted a winning trade. Your job is simple. Wait, watch, recognize, execute, manage risk, repeat. So how did I make $3,200 trading one setup over and over? Not because I found a magical strategy, not because I predicted every market move, and not because every trade was a winner. The real difference was focus. I stopped trying to trade everything. I stopped changing strategies every time something went wrong. I stopped believing that more information automatically meant more profits. And I started doing one thing. I mastered one process. That's the lesson I want you to remember. You don't become a great trader by constantly searching for the next setup. You become a better trader by taking one good setup and learning it so deeply that you know exactly what you're looking for when it appears. One setup, one process, one disciplined execution at a time. And remember, the goal isn't to trade more. The goal is to trade better. The next time you're staring at your chart wondering, what should I trade? Ask yourself a better question. Is my setup here? If the answer is no, wait. That patience might be the most profitable decision you make today.